Hey, it's Mac with PriceActionTradingSystem.com. It's Thursday, May the 16th. This will be our chart lesson for today. Um, Obvious trading range today. You can see the lows down here. We've really been finding a lot of support here, a couple of points higher than that later in the day, really from early, mid-morning to this afternoon. My guess is we'll probably work on through there and test this low again before it's over. Just have to see. We're working down this little channel here, you can see, and we haven't broken it yet. There were obvious channels up and down all day if you just followed the rules. Since it was a trading range, you just about could short everything up here, and I didn't mark this one. I'm going to go ahead and mark it. I meant to, prices were really just kind of, there's a short there. And really all you had to do, the best trades were shorting off the highs or buying off the lows. But if you found the channels, there were good trades all the way through. So fairly simple day, really. I mean, a lot of people really struggle on days like this because it's, about the time they decide to buy, it's up here and they're buying the highs, and then about the time they decide to sell, it's down here in the lows, and they sell the lows or whatever. So, but once you understand these days and you trade them properly, they're not really that difficult. And I really had the day starting out with highs right across here. You can see you were getting the most touches right across here, but it just kind of moved up to here. And really that's kind of where I had it later in the day, was right across here. But early on it was here, so we'll start there. But I usually start around 7 or so, a little after. I usually try to be here by 7, ready to trade though. And this should have been red, and I made it blue. I don't want to confuse anybody, so let's fix that real quick. Before we get started though, let me just say this. This was really interesting here because this setup almost identical to yesterday. It looked like a possible trading range. We were making higher highs and higher lows, so I felt like we were going to break higher. But unlike yesterday, it didn't take off and just keep going. It did what normally happens: is you get a failed breakout and you come back inside the range and you go to the other side again. And this is what happens more commonly. It's rare that you get a break out of a range like this that takes off and never checks up. And so all the people that probably witnessed that and did well yesterday, or I won't say all the people, but a lot of them probably thought they were going to do the same thing today, and guess what? They get long up here on the breakout, and they're long at the very high, and next thing you know, it's 5 or 6 points lower, and they're wrong, and they get stopped out on the other side. I only see it come right back again. But this is definitely a range day. It's obvious that you've got a range pretty much right between 1657.50 or so down to 1651. That's what I would call and you might have even called it up here, same thing. 58 down to 51, about a 7-point range there. But like I said, this is where I started this morning. So let's go back and talk about the trades. Back out a little bit. And the first trade was here, 2 legs up. We broke out the high, and look at that reversal bar. That's a great setup. It didn't close directly on its low, but you still could go short below that or use a limit order once it triggered. And let me just say that real quick because people keep asking me this. This is your signal bar. That's obvious. This is the bar, but the trade does not trigger until prices move below that bar. So what you do when that bar forms, go ahead and drop a stop order to sell right there. Or the alternative is you can wait for the trigger and then drop a limit order in. But the trade doesn't trigger until prices tick lower than this bar, or if coming up, tick higher than this bar. Those are the triggers. And again, you got one here. So this is a great reversal bar. But the trade, just because that bar is there doesn't mean you automatically sell. The trigger is once this bar is complete and closes, that prices tick below it. And again, you use a stop order, a sale stop order, or you can wait till it triggers and drop a limit order. There's pros and cons to both, but if you want to be sure you get in the trade, you use a stop order. And if it never triggers, you just cancel your order. So that's how you enter, and this is the signal bar. And somebody had some confusion. What's the difference between a signal bar and a reversal bar? Well, they can be one and the same. A reversal bar is simply a bar that was trading much like on the upside, was trading. Look how bullish that looked when prices were trading up here, and then suddenly at the last minute it collapses and it closes almost on its low. I mean, that bar reversed and it's at a high, so that's what I call a reversal bar. Here's another one. Here's a somewhat of a reversal bar off the bottom. Here's another one. Here's another one. They were trading way down here and they reversed and closed much higher. This is a reversal bar. Didn't quite close on its high, so it wasn't a good setup bar, and you can see that. It took prices a few minutes to take off. But that's the difference between a reversal bar is just a bar, you know, that was trading in one direction. They're usually, when they're really nice or setups, is when they're at extremes, and basically that bar reverses the trend back in the other way, and you can see that. Same thing down here. And it just reverses a move in the other direction, so we call it a reversal bar. And that's, but these are your signal bars. A signal bar is what sets up the trade. So hopefully that's clear, but let's talk about the first trades again. You got a nice reversal bar. Again, this is your signal bar. You stop your entry order, your stop order goes one tick below it, or you wait for it to trigger and then you drop a limit order in there, a tick or two back, or you might try to get all the way back up to here, but you may not get filled. And the more conservative you get, or the more often you're going to get left behind. And look at that move. You were in and out of that in a blink. I mean, that was just a real easy trade, and you know, you could have got several points out of the runners just by, you know, exiting your runners right down here at the low. Great setup. Notice that I circled this in green. There is a second entry long here, but it's not a good setup by that time because of all these overlapping bars. And then there's a second entry short. But again, the reason I do this in green is because there's just not really a lot of setups down. There's not a good setup here. You might have considered going long above this bar, but even then, you know, it's just all this overlap. There's a good chance it breaks out and turns and makes another leg down like that. So I drew that in green. There's some aggressive longs here because you're coming off a double bottom on what looks like a rangy kind of day, but it was really early and there wasn't a lot of price action yet. I mean, you know, this is what you would have been looking at while all this is going on, and you just see all that overlap. And it's, you know, then you get a second entry short. You know, some people probably would have thought about going short right there, but it's too close to that low to start with. Then people thought about going long, and then, oops, I think I'm trapped. And then they say, oh, I'll go short again, and guess what? They get trapped, and guess where we're going? Right back to the other side of the range. And then you notice you start getting resistance up here. So now you know, it's really looking rangy, but you got your trend channel coming up here. If you draw that trend line, and you would have easily could have drawn it off the highs, even if you didn't find it off the lows, but it's pretty simple to find that off the lows. You got a two-legged pullback to the trend line, the EMA right there. Great setup to go long. There's your first entry, no runners, easy scalp. But then you get a second chance here, and you might have been thinking, hey, this is really close to these highs, but your high was up here, so we're likely to go at least test that again. And because we're making higher highs and higher lows here, and we hadn't had a trend line break, this is worth taking, you know, expecting it will probably go here. You know, that's what I was thinking. Of course, we went much higher, and you could have got maybe a couple of points out of runners there. But as soon as that bar formed, I definitely would have been exiting. And notice this is a great setup because it broke higher first and then turned down. So you really could have gone short right below that bar because there's a trap up there, way up there. But if, you know, more conservative would wait on this bar to form and I would wait for it to trigger and then drop a lemon order, maybe a tick or so or right there, because then you're starting to get way back down here close to the trend line, and we hadn't really had a break. You had a little bit of a break, but no real closes. But on a range day, somebody else asked me that too. Good time to answer that. Notice you got this channel and you got a break here, and all you got was 2 tests of the trend line, and it couldn't go any higher, but that's because there's a lot of resistance right across here, and we got back inside it. So on range days, you don't get a retest with a new high quite as often. You still can, but it just doesn't happen as often. And sometimes you'll get just a retest of the resistance area or the trend line, or you might come up and get right in here and then close back down here with a reversal type bar, that kind of thing. So this, just be aware that you don't always get a retest on these shorter term trends that form within a trading range. So now we got this thing way up here. Now we've moved it on up, and you can see that's pretty much where it's kind of held the rest of the day. But great place to get short. You don't know that it's going to take off like this. Any runners, you could have ridden this all the way down the bottom, and guess where I would have exited? Guess where I did exit? Right there. Then you get this, again, we got this tick lower and a turn up, and I really thought it was going to break out on the same candle. It didn't quite, but it quickly broke higher. And if you didn't go long one stop above it, look at that bar right there. You could have even maybe considered there, but you're getting real close to the EMA again by that time, and you could hit this and come back for a second entry. But the way this thing's been going higher lately, a chance to buy lows that bounce real fast like that. And I noticed this one didn't bounce real fast. It took a while to work out of there, where this one bounced out of there pretty quickly. There wasn't really another good setup until right here. This is just too much overlap, kind of like this. Not really a great place. There was a little second entry short here that's kind of like a trap, but if you drew that trend line up there, then you had to be thinking, hey, maybe we may not get through there, and of course that we didn't. I just thought it was too much overlap. You really could have gone short right there, but again, we're trending higher off a low, so I don't recommend going short there. That's the reason I didn't mark it. And then again, you get a lot of overlap. You got a first entry, then a failed second entry short. Again, both of them right off a possible trend line. And now you definitely should have had this line off those 2 highs. So that's a second entry long. Easy trade. No problem getting in that trade whatsoever. And it moved really quickly. And guess where it turns? Right off your line, comes back. You got a reversal bar right there. That's your signal bar. And there's really 2 legs down there. One leg, and that's a little pullback, and then a second leg down that reverses off its low. Great place to go long right there. It took a little minute to work on out of there. Easy scalp. No runners, unfortunately, but look, you get another chance to enter right there. And then there's a little trap. So really, you could have entered on either one of these. I think the reason that I didn't draw the second one is because by that time there's a lot of overlap, but you got that trap, and once you get a trap, you just about can take them. And even though it's as high, the new high has been up here, but you're still getting resistance across here. You can see that, but once it got through, it broke on up, and right off that line again. And this was your last high on a range day. You typically can fade every new low and every new high, and there's a new high. You can fade that one, and make sure you got enough room to get out before you get to your trend line, because see how that bounced instantly, and then we turned back down again. I didn't like going short here because you did have a lot of overlap, and you were back. You had not got through the EMA. You hadn't got through the trend line, but when that second entry long failed right there, I almost went long right there, I'll be honest with you, because I thought we'd probably might push up to a new high. Talked myself out of it, and I'm glad I did. Just not a good place to be going long right there, since we made a lower high, and then this one makes a lower high. So now you got a trap. I drew it in green because it is a little more aggressive, in my opinion, simply because we haven't got a trend line break. But you can see it moved down really quickly, easy scalp, and then you pullback again. It's a failed second entry long now. So you got a long trap, and you're thinking you're going to be coming back down to the other side. And it takes this one a little bit of work. This one I started getting nervous, but it works. Yeah, a little break there, but there's just so much overlap, and you're getting some really strong support right there. And you can tell there was no reason to be entering in here. This was the first one. Now you got your break and a new low, and that's a reversal bar right off the lows of this little range. There's enough room to get out before the top. I didn't know it was going to go all the way back, but it did. And then there's you another chance to short right up here. And this is kind of the retest, I believe, from this channel right here. You get a retest here, a chance to go short. And look, now we got a new low down here. This was a great move, and you could have ridden this all the way down. And again, I would have probably exited right here. Sometimes you might just watch it, and if it goes right on through like that, you might want to hang on. But generally, I just, when I get in up here and I get a chance to ride that all the way down to here and make 7 or 8 points, I'm exiting. I'm not going to get greedy because the odds are it's going to bounce there. And you might get another 3 ticks to, 8 or 10 ticks, but it's generally not worth it because most times it'll probably bounce there. And then that was the last trade I marked today, but obviously there's some shorts coming down this channel here. There's been no break of it really yet. This is not a great setup, but that's really a two-legged pullback to the trend line with a smaller bar. You're probably figuring we're coming back down to the low side, so you probably would have risked that one, and it would have been a great trade. I definitely like that one right there. So really 2 more trades. We might as well go ahead and mark them. It's just happened while we've been doing and hopefully you see why without me even really explaining it. They're coming right off that little channel coming down through there. And we really have never broke it yet. We overshot it down here. Now, remember, when you get an overshoot, a lot of times you're going to get an overshoot on the other side. Excuse me. My whole family's sick, and I've got just a little itchy throat, but my whole family's got this crud that's going around, so now my throat's getting a little itchy. I hope I don't come down with it. I've had some throat issues a lot in the last year, so I'm hoping I'm not going to come down with it too. But really, if you draw these trend lines, and people will send me their chart, and they'll be asking about trades, and I don't see any of these short-term trend lines. And there's no way to trade this in here. If you take these lines away, I mean, look at that. Look at that. It looks, how do you make heads or tails out of it? You're just guessing. But when you put the trend lines on there, look how it pops out to you. That's definitely a channel. And so you got to draw these trend lines and draw your support and resistance lines, and then it sticks out and it makes sense to you, and it's easier to trade, and you know whether there's been a break. You know how to follow the rules. Look at that little line channel. We got the break, couple legs down, reversed right off the low, got a reversal bar there. I mean, it just makes it so much easier. And when I see people send me a chart and they don't have these trend lines on there, I mean, yeah, you got the EMA kind of acting as a trend line, but it just, I mean, look at the difference in that price action right in there. Let me just, if you take these off too, just take all that off. And now look at that. It just looks like, I don't know what you want to call that, but it's not very clear what's going on there. But then you put your lines on there and look how that just pops out to you. It's totally different. It takes on a whole new meaning every time prices pull back. Every time prices pull back to that line, you could have bought and made money, except for this last one right here. And if you just bought at the line, you still would have got 4 ticks. But there's a lot of people that trade that way. They just got an order sitting there waiting on it to come back. I don't like doing that because eventually it'll go through. You're better off to wait. But you would have known not to be buying this one maybe because you're right up here at these highs again. But there's still room right here to get out before you get up here. And you see we got almost up there. So if you used a limit order, if you bought here and used a limit order, and you probably still could have got a scalp out of that one, but it's really getting tough by this point when you're up here, back up here, and it's a proven range day. And this is obviously a range day. We've had a break out the top, and now we're going to have a break out the bottom. We could come back to the EMA and turn down and go a little further or keep trending down, but there's only about 45 minutes left. My guess is we'll probably get back in this range and chop around or go back to the other side again. Who knows? Until you get a break of that trend line and a new low, though, be careful about going long. So it is a range day, and generally you can buy every new low. So there was a little trap right here, so you could have gone long right there, 49.75. What we have to get out of that, you got to come back and test the 51 area to get out of that. So I probably wouldn't have taken that trap this late in the day, but generally you can take fade every new high and every new low on range days. But this is one reason why you may want to pay attention to the trend line, and that's why I drew this one in green right here, because of that very reason. Going long right there was a little bit dangerous, or going short right there was a little bit dangerous, but it worked out. So, and you can see this one's probably going to go on up and do just what. Now they've got a failed second entry short. So, of course, it's not failed until it goes higher, it breaks above this one of those bars, but it looks like it's heading that way. We'll see what happens. But one other thing I want to talk about today, what was it that somebody asked me that I thought I would mention? I can't remember what it was. Well, I can't remember what the other question was now. My mind went blank on me. I'm getting old. That happens. Our memory gets, short-term memory gets, doesn't work as well. Mine doesn't anyway. So, but really good trading day. Lots of entries. I raced a bunch of them all. 1, 2, 3 of these entries, I think. But really good trading day. And, just lots of entries, lots of easy scalps, several runners. But hopefully you see now, this is a typical of what happens on range day. And what we got yesterday is very untypical. And this is why we don't buy breakout of ranges, even though sometimes you break out and this happens only rarely enough to make you think it will be a profitable strategy, and in the end you will lose money, because this is typically what happens when you break out of a range. First time it failed, and maybe you moved the range a little higher, and then it breaks out again, and what does it do? It fails, then it tries it again, it fails. Now it's broken out the bottom, looks like it's going to fail. You just don't, you don't enter breakouts at the extremes. You usually fade them. You're usually going to do better off fading them, especially when it's a known range day like this. So hopefully that makes sense to you. I hope you had a good trading day. I did get some emails from people saying that, their trading is really improving, following the rules. And my guess is because they're not buying the breakouts and they're trying to buy the lows and sell the highs, and it's working because, we teach it for a reason, because it works, and that's how we trade it. So this is a bigger range. On days where you get a tighter range like this, when you get a tighter range, there's not a lot of room. You're better off just to buy the lows and sell the highs. Don't be trying to figure out the stuff in the middle. But when you got this bigger range and you can get clear trends within, use the trend rules but just be careful once you get to the extremes. Don't be going short right down here, and don't be going long too close up here to the highs. So the bias has been up lately. So you notice we've had a lot more success going out the high side far enough to at least get your trade versus the low side. We only had one trade that went lower today, and we didn't have any entries down there really. So, but that's because the bias has been up, and people are looking to buy, still thinking we're buying. Everybody keeps, probably multiple times a day, people thought this thing was going higher, and I wasn't sure that it wouldn't until you see the setup. So, I believe that makes sense. It should make sense to people, and just follow the rules. draw your short-term trend line. Don't be guessing, and trading's a whole lot easier. So I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.